Hello, hello. It is 6:35 p.m. Wednesday, October 26th for the post-market review. Looking at the economic calendar today, we had home sales data for the U.S. at 10 a.m. that came out better than expected. But be careful, even if they're green, right? People will look at green and say, "Oh, it's good news." But this just means that it beat the forecast. But if you look closely, in both the new home sales month over month for September, previous was 24.7%. Now we had a contraction of minus 10%, much worse than previous. Previously, we had 677 new home sales. Now we had 603. So even though the data is green, we beat the forecast, it's still showing recessionary. It has recessionary qualities here because it's less than previous, right? So new home sales is taking a hit. The real estate market is taking a hit as a whole. So this was negative news for the U.S., which we'll see on the charts if there was any impact. I just want to cover also, important to note, today we had the Bank of Canada interest rate decision where the Bank of Canada raised rates by 50 basis points from 3.25 to 3.75, which was less than the market expectation of 4%. So this was a negative surprise, which caused some short-term weakness on the CAD, as the Bank of Canada did not want to raise that full 75 basis points, perhaps trying to be a little less disruptive on their economy, right? So they're still trying to fight inflation, but trying to be a little softer, trying to get that soft landing here. But I don't know if this is going to be enough to fight inflation, as they're probably going to need to continue to raise rates. But anyway, for the short term, there's a little bit of a negative surprise there. Anyway, looking at the US dollar. So from this morning's analysis, we noted that the US dollar was in a pullback trend from these highs. We had like the Chinese government and the Japanese government intervention had a little bit of a pullback, and then the Chinese government continued to sell off their US dollars to try to stabilize the yuan. And we saw continuation over the London and New York session today, as US dollar weakness was the primary sentiment played today. So we had some good volume and volatility to the downside on the US dollar. So noting that this is still counter to the higher time frame trend, the fundamentals are still bullish for the US dollar, since the Fed has not yet pivoted. They have not even made any remark about slowing down whatsoever. So the fundamentals are still bullish for the dollar. However, us playing the short-term weakness on the dollar here, which correlated pretty well with stock markets breaking new highs, breaking past previous lower highs, significant levels, 3,800, and the VIX weakness as well. So there's a clear sentiment in the market this morning, which continued pretty much over in the New York session. Even if the stock market retested our key level 3,882 and rejected, it's still maintaining this overall bullish structure here with a sequence of higher highs and higher lows. So the sentiment, it continues, US dollar weakness, short-term optimism, and taking all that information out to the charts here. My trade ideas for gold played out very well. Again, just as a recap, we had dollar weakness, Fed slowdown hopes, equity strength holding, VIX weakness, we already noted that, optimistic sentiment, good volume volatility, and clean ranges and price action. So we had great market conditions, as US dollar also printed new bullish structure on the 1 hour and the 4 hour time frames, breaking above these previous highs here, 1662, where we got this pullback and continuation from as we got our trade based on trade idea number 2, which was the pullback to 1 hour break of structure retest here at 1662. So we got that trade idea based on the above fundamental confirmations here. Looking at the 1 minute price action here. Now, when I'm looking for entries, I'm looking for an ABC pattern. So for me, the ABC pattern was quite evident here as we retest our key level 1 hour break of structure from our trade ideas. I want to have a weak resistance and signs of exhaustion here. So weak resistance into our key level, which is our A. This is the A point. The B point is liquidity grab, failures to break, and then the C is buyers take over, print new higher highs, and 1 minute breaks of structure. So again, the ABC liquidity zone, the signs of exhaustion here was this: A, weak resistance attempt; B, failure to break, liquidity grab; C, buyers take over, entry on the retest of the A, stop loss below this the B right here, aiming for 2-to-1 as my first target, right near the previous 4 hour supply key level for about, how many pips did we catch here? 60 pips here for target 1. And I tried holding a runner as our target was 1680, excuse me, as a higher time frame target.